Good morning. This is Dylan Jovine with Behind the Markets. Happy Tuesday. Today is Tuesday, September 23rd. And I saw a very disturbing report, actually from Google. Basically, Google searches for help with mortgage has now surpassed the peak of the 2008 global financial crisis. So that really reiterates the fact that consumers are having a difficult time really paying their mortgages at a level not seen since the 2008 financial crisis. That's very troubling to me, to everybody. And this is backed up by what we've seen from Walmart and a bunch of retailers out there that are saying the average ticket price at their stores, the average sale, the average order value has gone down. It's crazy. Contrast that with the fact that stock valuations have hit a new all-time high, according to Bloomberg. Right now, stock valuations are, and they use trailing PE, forward PE, capital asset prices model, price to book value, price to sales, the Q ratio, all this stuff. It's unbelievable. What we're seeing here as of right now, we're talking about a stock market that is more expensive on a valuation basis than 1929, 1965, 1999, and we're more expensive than any of those. Wow. It's unbelievable, really unbelievable. But you think about it. If you're in the stock market, you're making a ton of money. My goodness, look at us. For the last 8 years, our average gain is 40% on trades, and we write 7 out of 10 times. 70% of our trades have been winners across all services. That's great. But that's if you're in the stock market. If you own stocks like Palantir or Nvidia or this one or that one or Google or Oracle or any of these companies, you're sitting pretty. But if you're sitting there and you don't own stocks and you're trying to pay your mortgage, you're not happy, especially with inflation now coming in about 3% now. You're watching the value of your dollar decline every single month, basically. So you really have, and this speaks to the conflict between the president and Powell. Powell is saying inflation's running hot, basically, and we're running at 3%. And we have the situation where we're running at 3% with inflation, and you want to lower interest rates because the labor market's not doing well, but that's going to spike inflation even more. So it's a very tough situation to handicap. Regular folks are hurting in America. People who invest in the stock market, they're doing great. They're doing fabulous. It's been a great year. It's been a great 2 years. The stock market started marching higher last year under the Biden administration, let's be honest, with all that fiscal spending they were doing in that second half of the year. We are in a crazy good stock market, but the stock market ultimately is going to be based on earnings, and earnings are ultimately based on consumer spending. So if the consumer is struggling to pay the mortgage, that means earnings will get hit at some time, because no matter what, Nvidia, AI, earnings might be great, et cetera, but 70% of all economic activity is driven by consumers. So we could say the Mag 7 is still spending on AI, Nvidia is still selling chips. All that stuff is true. It could all be true, but don't forget that accounts for 30% of GDP, business-to-business spending. Consumer spending is 70% of GDP. So it is consumer spending that will drive this market, both in the short term and in the long term, period. That's just the name of the game. And just to put a fine point on it, you have hedge fund guys like Stanley Druckenmiller, famously is Scott Bessent's old boss. There's an article in Institutional Investor, Stanley Druckenmiller's liquidation sale. The legendary investor unloaded a record number of stocks and slashed his big stake that he had in Seagate Technology. And it said he went on a selling spree. The legendary macro trader's office fully unloaded 37 different stock positions, and more than any other quarter since he shuttered his hedge fund to devote his time to managing a family office. And he only initiated 12 new positions in the first quarter. Basically, what you're seeing here is sophisticated investors really starting to pull in their sales, take some chips off the table, which is something that we'll be doing more of. For those of you who watch this very carefully, we started to sell a little bit more this month. We're going to start selling a little bit more, just lightening our load, selling some of our weaker things so that we're not caught in a bad situation here, which is that we don't want to be caught in. So what can I say? Anyway, that is all I have for you on this beautiful day. I will add one more thing. If you look at the rise of populism in this country, before I leave, populism has been rising, socialism, they're very similar economic theories behind them. Basically, on the right, Trump once said that Bernie Sanders is more similar to him than anything. You have that populism over there. Then you have the socialism, basically, from Mamdani, who seems to become the mayor of New York, who seems like he'll win. 80% chance he's going to win and become mayor of New York. Unbelievable. Actual socialist. It's remarkable. But basically, these economic policies, they're like boils on the body, these governing policies. What they mean is that not enough people are actually benefiting from the system that we have. Too many people are being left out. So that causes the rise of populism. And the last time we had this kind of rise of socialism and populism to this extent was when we moved from a farming economy around the turn of the century into the 20th century. From a farming economy to the industrial economy, you had a massive rise of upheaval and populism until Teddy Roosevelt came into the office and really came up with the square deal concept and really fought for labor rights and all these other things. But right now, as we move from a manufacturing that fully gets hollowed out to technology and then AI, we're seeing that kind of populism, which is telling you, very much like Soviet socialism, telling you not enough people are enjoying the fruits of this economic system. And folks, I don't got to tell you this. If that keeps growing, where people just aren't enjoying it, you know where that leads to, right? It leads to pitchforks and governments being toppled. So we have to figure out a way to get more people involved in this system. Anyway, that is all I have for you today. Have a wonderful Tuesday. I'll speak to you tomorrow.